All right, guys, welcome back to the show. I get a lot of DMs and people asking me how you can trade, how you can get into leverage trading, what is the difference between spot and leverage trading, and all that kind of stuff. They can't navigate the exchange and how to actually do all this. And that is exactly what I'm going to give you in this show. It's going to be a very simple tutorial. I'm going to talk about difference between spot trading and futures trading. I'm going to talk about exchanges, how you can choose the right exchange, what it means to do KYC, what reputation the exchange should have, what is the benefit for you to use a specific exchange. I'm going to talk about different accounts within the exchanges, your spot account, your funding account, your derivatives account, which could be confusing for some. Then I'm going to talk about how you can navigate on an exchange account. If you just get onto an exchange, it can be quite difficult to try to find your way around. And then I'm going to talk about the difference between shorting and longing the market, what is leverage, and we're going to close it off with talking about how you can actually execute a leverage trade. So let's jump into it. Let's start with the number one. But before I do that, I wanted to ask you to smash and obliterate the like button, subscribe to this channel. And if you don't know me, my name is Fefe. I bring you the best of the best of the best alpha, whether it's trading, it's deep dive on different tokens, it's deep dive in different narratives. I'm here for you. So make sure to follow me on X. I post you daily alpha. I literally am printing money for the community as we're trading together. You can check it out for yourself. And if you like what you see, make sure that you follow me. There's a link in the description. But let's get going. So number one is, what is the difference between spot trading and futures trading? It's quite simple. So when we talk about spot trading, which I'm not going to spend that much time on in this video, but spot trading is basically buying the actual asset and being able to transferring that asset out of an exchange. You hold that asset for yourself. That means, for example, if I buy Bitcoin and I buy one Bitcoin on spot, that means that that one Bitcoin is mine. It cannot get liquidated. They can't really take it away from me, unless obviously if the exchange goes bankrupt or if the exchange freezes my funds. This is why we're going to talk about exchanges. But in general, when you buy something spot, that means that you hold that actual asset and you can transfer it out anytime. On the other hand, when you talk about futures or leverage or derivatives trading, you can call it all three different ways. Different exchanges call it differently, but all these mean the same thing. In that way, you actually don't hold the underlying asset. You just basically bet on the price going up or going down. So when you trade derivatives, you trade the underlying asset, but you don't actually own that asset. That means if I buy one Bitcoin on the futures market, on derivatives, I cannot transfer that Bitcoin out of the exchange. I'll have to go back to USDT, and only then I'm able to transfer my USDT out of the derivatives account. I hope that makes sense. The difference between the two as well is that while you can really accumulate on spot and you can hold for a long time, there is no liquidation risk. It's very difficult to multiply your money, especially if you have a small account. So if you have $1,000 account and you buy $1,000 worth of Bitcoin, you might be up $3,000 by the end of the bull market, $4,000 in very, very good case scenario. However, you can use higher leverage, which I'm going to get into now, but you can use higher leverage, for example, 10x leverage, and your $1,000 purchasing power or account now has a $10,000 purchasing account. So that's the basic difference between futures and spot. Let's talk about exchanges. Let's talk about KYC. So we have a bunch of exchanges. As you know, 𝗙𝗘𝗘𝗙𝗦 is one of the largest crypto channels out there. We partner with all kinds of exchanges, and the whole purpose is to bring you the best of the deals. So we do have a lot of partners on the channel as well, but the most important is that you have to pick an exchange based on different criteria. Number one is KYC. So KYC means know your customers, like a regulatory framework where the exchanges and financial institutions and different institutions need to verify your identity for them to be able to offer their services for you. So most of the bigger exchanges, we're talking about Bybit, BitGet, Binance, most of these bigger exchanges are well regulated, and therefore you need to complete KYC to actually use them. But there are a lot of underdogs. There are a lot of other exchanges that are still reputable, still trustworthy, with a lot of liquidity and great offerings, but because the regulatory framework did not get to them yet, you do not need to submit your ID. You don't need to verify your own identity. There are different reasons to use a non-KYC exchange. One can be even if an exchange is limited in your region because your government says that you can't use it. Obviously not financial advice. You should never go against your government. Never, ever go against your government. But if for some reason you would want to, a non-KYC exchange could be a great solution. Or also, if you just want to trade without you being tracked and without your trades and the money you hold on the exchanges being connected to your name and your ID, a non-KYC exchange could be a great solution. Now, the second thing is reputation. It's very, very important when it comes to exchanges. You want to make sure that you pick the exchanges that are reputable. And when I say reputable, if you look at FTX, everybody thought they were great and then they went under. But there are so many exchanges that will try to scam you out of money. They don't have liquidity. They don't even actually have the funds that you deposit there. It's just a loophole where you send money and you never get out, but you think you did. So it's very, very important to use only reputable exchanges. This is what the 𝗙𝗘𝗘𝗫 also helps you with. This is also how we have an entire team filtering these exchanges and bringing it to us. We're testing the exchanges before we promote it to them, so promote it to you. So it's very important to choose a reputable exchange. Whether you're going to use any of the exchanges down from the description or you're just going to find one for yourself, it's very, very important that you use a reputable exchange that you know is not going to go under and you use your fund. Now, what is the benefit to you is the big one. Because the reason why I love to work with a lot of exchanges on my daily shows as well is because when you have the bull market, as we see, it's booming, everything is skyrocketing, the exchanges are competing for the people, right? Most of the exchanges that we work with have a very similar interface. They work great. They all have liquidity. They're all secure. There's not much difference between these exchanges, but there is a difference on how they market their product, how they market their exchange. So the way they do it is that they offer you incentives. Now, here's what I recommend you do, and this is what I've done when I had no money. There are certain exchanges that offer you fantastic sign-up bonuses. There are literally exchanges, I'm going to show you in a second, where you deposit $1,000 and they straight out give you $200 to trade with. That means you do not have to risk your own money at all just by signing up, because they know you will get there, you will like the exchange, you will stay around the exchange, and you will become a long-time customer. Or if you don't like it, you will just leave, and that's also fine. They calculate it as a marketing budget. Or there are other exchanges where you can get a holiday based on your trading volume. There are a bunch of different incentives on all kinds of exchanges. I would recommend you try to sign up to all of the exchanges that you can, especially if they are non-KYC. It's free to sign up, and you can get a lot of benefits. Right now, I can top of my head say that you can sign up to 5 exchanges and get $1,500 straight out without investing $0, maybe a little bit of time, but that's it. So it's very important that when you pick an exchange, of course you have to like it, of course it has to be reputable, of course you have to pay attention to the KYC, but other than that, make sure that you know what benefit the exchange offers you. Next one is accounts and exchanges. Let me go through the exchanges that I would recommend you use. So WEX is one of the exchange. Multiple reasons. One, you get $20,000 deposit bonus. The way these work is that the more you trade or the more that you deposit, the more money you will be able to win. So for example, if you register and link your phone number, literally just put your phone number in. You don't have to KYC, but you have to put your phone number in if you want to. You get $20 just for doing that. Nothing else. You don't have to spend anything. You can take this money and you can trade with it. It's free money. Now, identity verification. If you want to do KYC, you get another $10. If you deposit $200, you get $100. So by signing up to, for example, WEX, I'm just showing this as an example. Signing up to WEX, of course, you have to use our link. This is what we negotiate for you guys. You don't really get this anywhere else. So this is a great deal. It's not like you might be thinking it's too good to be true, and it kind of is. But this is the power of banter, and this is how we take care of the community. But in general, if you sign up to WEX, for example, you can get and hook up your email, hook up your phone number, even if you don't want to KYC, you can get $120 to trade with today, like literally. Okay, anyway, and you go further, if you, depending on how much you trade, if you trade $1,000, you get $50 and so on and so forth, all the way up to $20,000. There is another thing that goes on with WEX now, which is worth signing up, is that we have a competition going on. If you are number one in a competition based on trading volume, you can have a chance to come here out to Cape Town and be here with us for a while. But that's about WEX. There's a link in the description. Bitunix, another non-KYC exchange, means you don't have to KYC to use it. The good part about Bitunix is that they offer a 20% rebate on your deposit. That means you put in $2,000, you sign up, non-KYC, you put in $2,000, you immediately get $400 to trade with. You don't have to spend your own money. $400 you get on your account and you simply can trade with it. PrimeXBT is great for a couple of reasons. Again, non-KYC. They also have a 20% deposit bonus. But the best part is, again, it's like already what you put together is already like $1,000 deposit bonus, and you just move the money around. And the best part is that you can trade stocks, commodities on PrimeXBT as well. And then there is CoinW, for example. And the reason why I brought them here as well, first of all, great team, and we love them. Great platform, great liquidity, but also they have stuff like these legend cups. That means that you can get a share of the $1 million prize pool. They always are on stuff like this. You can win a Tesla, you can win a Xiaomi car, you can win an Apple Vision Pro. all by simply using the exchange. So now you see that there are a bunch of different ways to actually do this and a bunch of different exchanges. And if you take the time, and this is what I wanted to say, it's not about this episode is not about the exchanges, but I wanted to say this is that if you get into this and you say you don't have money, you are lying to yourself as well, because I literally just showed you a way to get $1,000 from nothing, from literally spending zero money. You spend maybe an hour on rotating around, signing up, and actually taking these bonuses. And I'm not even talking about how you can multiply that money that you sign up with. Anyway, there is another one that I wanted to share with you. It's called 𝗙𝗢𝗡. 𝗙𝗢𝗡 is great because I give away $500 every single Friday to my viewers on 𝗙𝗘𝗘𝗙𝗦. We're going to put up a show. I am live on 𝗙𝗘𝗘𝗙𝗦 every single day, bringing you the daily alpha and trades and much more. If you are following me on X, you already know this because I posted about it. All these trades that we take is coming from those live shows. But the best part is, if you sign up using my link on 𝗙𝗢𝗡, I'm giving away $500, so $100 per person for 5 people every single Friday on my show. So anyway, you see that there are a bunch of different opportunities to sign up to different exchanges. Have to make sure, you have to make sure that it's a great exchange, reputable. You have to make sure if you want to do and don't want to do KYC and pick the exchange based on that. And then you have to make sure to get something that you have from the exchange. The exchange has to beg you to trade on there. And there are some fantastic sign-up bonuses to all the exchanges. So check them out as well. It's very cool. I appreciate if you use my link in the description. There are a bunch of other exchanges that you can check out, but these are the notable ones right now that I would recommend. But let's jump back into this. And let's talk about accounts on these exchanges. I'm going to use 𝗙𝗢𝗡 as an example. I trade on 𝗙𝗢𝗡 as well, but it's going to be very similar on most of the exchanges. So the way you look at it is you go onto the wallet, and when you are in a wallet, you will be able to see different accounts within your exchange. So you will be seeing funding account, spot account, contract account, earn account. So you will be able to see if you go onto Bitunics, it's called spot account, futures account, and copy account, but you always have these different accounts. Now, what do these accounts mean? Spot account is the spot trading account, mostly for investment, as I said, or larger sums of money. If you're managing $500,000 and you want to go on spot because you don't want to use leverage, you don't want to borrow money, and you don't want to do all that, you actually want to buy the assets, I recommend use obviously the spot account. A lot of times you have to, when you click on deposit, you have to deposit money to an exchange. So you can click on deposit and it will give you a deposit address. You can send in USDT. It actually guides you through, which is very cool. You can send USDT, USDC, you can Bitcoin, Ethereum, all that stuff. You send it in, and then you will have to make a transfer between the accounts, because when you make a deposit, it lands either on your spot account or on your funding account. So for example, the reason why I show you different exchanges, because I know I talk to a lot of people and I know that it's kind of confusing to some. So it's good that you see all different platforms. So this is, for example, my funding account here. When you deposit funds, it will be here. I don't have it here because I have it on my contract account, which is my trading account. I have $5,000 here. But if you go onto your funding account, when you deposit, this is where it's going to land. So you're going to have dollars here. Now, once you have dollars here, how do you move that onto your trading account? The way to do it is you click on transfer, and then you will be able to pick where you want to send it. If you want to buy spot again because you have a larger sum, you can click on spot. If you want to go and start trading on leverage, which I'm going to show you in a second, you can click on derivatives. This is what you do. You pick the amount and you just simply confirm, and it will deposit it onto your trading account. And that's the next thing, which is how do you navigate an exchange? Now, if you go here, on all exchanges, it will be called differently, but most of the exchanges look very, very similar to this. You will have buy crypto, you can buy fiat, deposit, you can go peer-to-peer. Then there will be markets, which will show you all the tokens. And then you will have spot, which again, going back to the spot investment. And then you will have something either futures, derivatives, or perpetuals trading, right? So if you go here, you will have, for example, here, skip, you will have spot, copy trading, and futures, right? It's the same thing. So derivatives, futures, and perpetuals are the exact same thing. So, I mean, they're not the exact same thing, but in terms of crypto exchanges, I don't want to deep dive into what the difference between them. But when it comes to crypto and when it comes to leverage trading, this is what you do. Derivatives, futures, or perpetuals. So here I go into derivatives and it will ask me different things. It will say USDT perpetual, inverse perpetual, copy trading, trade arena, or if I go onto Bitunics here, there's nothing. It's just futures. That's great. So it can ask you different things. if you are becoming an advanced trader, this could be good, and you might want to, for example, use inverse perpetual, or you might want to do some copy trading. But for now, you have to pick the USDT perpetual. Any exchange you go to, USDT futures, USDT derivatives, or USDT perpetuals. That's the place to be, and that means you will need to have USDT or Tether to actually trade. Now, this comes up. I know this is scary, but please do not get scared of it, okay? So when you land on this website, let me see what I noted here, navigating shorts versus long. Let me just go here. When you land on here, you will see a lot of things. One, you will see the charts. This is why it's worth coming again to my daily shows. There's a link in the description to my X profile as well, and to my daily shows where you can see and understand these charts, which I help you with. But what you will see is that this is a chart basically showing the Bitcoin price. You most probably have seen this before. This is why you're watching this video. If not, just come to the daily shows. I teach you everything. But in general, this is a chart. You will see the time zones here, the time frames here. You can go 1 minute, 5 minute, 15 minute, so on and so forth. You'll see the order book. We don't talk about it now because it's too complicated. And then the right side, you will see the terminal to trade through. So for example, when you land here, you will be able to see different things. And now I'm going to go on to open long and open short. What's the difference? And then I'm going to jump back here. But what you have to know, up here, you will be able to search the token that you want to trade. You have all kinds of tokens that you can trade. You can search for it. You can just scroll as well. And you will be able to take different positions here, limit, market. I'm going to explain in a second. Now, what's the difference between shorts and longs? This is a question that I get all the time. It's very, very simple. Shorts, so in general, when you're on spot, right? When you are on spot, you buy the underlying asset. That means you're basically longing the market because you bought and you're betting on the price going up. Shorting, on the other hand, you can't short because when you're selling, you don't really short the asset. You just sold the asset that you bought and you took the money that you could get. But because the market usually trades and there are traders in the market, there is a mechanism called shorting and longing, which allows you to do this from USDT. So the way it works is that you have to have dollars to start with USDT perpetuals, USDT derivatives, USDT futures trading. So you start with dollars. When you long, you buy the asset and you get, for example, you buy Bitcoin and you get Bitcoin in exchange. Now you can't take this Bitcoin out because it's derivatives. And that means that you're betting on the price going up. If the price goes up and you sell, you get back more dollars. If the price goes down and you sell, you get back less dollars. Now, on the other hand, you can short. Shorting works in a way that you don't have to know this, but in general, it works in a way that in the background, when you hit short 1 Bitcoin with my dollar, you borrow a Bitcoin from the exchange and sell it on the market. And when you will close your position, you will buy back that Bitcoin and return it to the exchange, which obviously takes a fee for that. So in general, when you short the market or when you long the market, you're basically, I'm sorry about it. When you long the market, you're buying it and you're betting on the price going up. When you short the market, you're selling the asset, betting on the price going down. Now, I'm going to talk about leverage as well here. I think it's important to talk about leverage already. So leverage is basically a mechanism to use more money than you actually have. I have a complete video on what leverage really is. You can see it here. We will link it up here. But in general, when you use leverage, you can use, if you go on here on ZoomX, for example, you can use different leverage. You can use 10x leverage, you can use 5x leverage, you can use 20x leverage, 25x leverage, and so on, right? Both on short, both on long. Usually it's different. Some of the exchanges you can just pick one and it's the same for shorts and longs. Some of them is just, some of them you can adjust if you want to have higher leverage or lower leverage in shorts and in longs. And there is cross margin and isolated margin, which means if you use cross margin, you're basically risking your whole account as a collateral. And in isolated, you're only risking the amount of money you put in a specific trade. And I know it might be a little bit confusing, but trust me, I'm going to clear everything out. So when you use leverage, it means that you borrow money from the exchange with a click of a button. That means, for example, I want to borrow 10 times the amount of money that I have. Let's say I have $1,000 and I want to go in with 10x leverage. If I go in with 10x leverage on $1,000, my purchasing power becomes 10x, so $10,000. And that said, if I use 10x leverage, I will have $10,000 purchasing power. If I use 20x leverage, I will have $20,000 purchasing power. If I use 5x leverage, I will have 5x the amount, so $5,000 of purchasing power. Now, here is where the challenge comes, and here is where a lot of people really get screwed. If I'm borrowing money, 10x the amount that I have, the exchange has to protect itself. And the exchange protects itself with the same mechanism that you borrow. If you borrow 10x the amount of money, they say you 10x both your losses and your profits. If the market moves 1%, you are making 1% or you're losing 1%, depending on which way the market moves. For example, if you long the market, and the market moves 1% up, you're making 10% up. If the market moves down, you're 1%, you're losing 1%, but on 10x leverage, you're using 10% of your account. Now, what's the risk here? The risk is called liquidation. And that means that if, for example, you're 10x leverage with $1,000, if the market moves 10% against you, which is absolutely normal in a bull market, you reach 100% of the money that you used, and therefore you get liquidated or your position gets closed. The problem is, while you buy spot, you cannot lose the spot money, because if Bitcoin drops 10%, you still have the Bitcoin, it's just worth 10% less in dollars. But if you trade leverage and you're 10x leverage and the market drops 10%, you lose all the money that you had in the trade. This is why it's very, very important to do it. So just summarize everything. Leverage always multiplies everything. If you're 10x, that means your profits and your losses will be 10x as well, not only your capital. If 1% the market goes up and you're 10x, that means the market goes up 10%. If the market goes up 10% on 10x, that means you lose or make 100% of the money you put in the trade. Now, how does that relate to shorting? Well, it's the exact same thing. So you can literally just come here and say, like, I would like to short, for example, and this is the navigation back again, I would like to short on market price, then I don't have to pick the limit price, which means I want to sell at this exact price. I can just go market and I say, where do I want to short? I want to short either the number of Bitcoins, or I can give the order value in US dollars. You can set all this up on different exchanges. But for example, I want to short $2,000 worth of Bitcoin and I can open a short position. What will happen is that the exchange takes, as you see here, it says order cost is $200 and the total order value is $2,000. That means that I'm taking 10x leverage and I'm using only $200 of my own money on it. If the market goes against 10%, I lose this $200. If the market goes up 10%, I make $200. So it's a very, very powerful tool, but can also be very, very risky, especially if you don't know what you're doing. But in general, this is what leverage means. So you go into the derivatives, futures, or perpetual account, and you can take leverage on both long, betting on the market going up, and both short, betting on the market going down. Now let's take a position here. Let's take a long position here just for fun. You have to confirm it gives you what the market is, what trade you're taking, and then it will show up here on the bottom. Now you don't really see me. Let me just move myself here on the right. And you will see your position here. This is always almost on all exchanges. You will be able to see the position that you took. You'll be able to see the leverage. You will be able to see the value of your position. You will be able to see what was your entry price. You see it on the chart as well. You will see what your liquidation price is. So what's the price where Bitcoin has to go for it to completely lose all your money on the account? Now it's for me it's 0.10 because I put in a very little amount from my entire account. I have $6,000 on this, $5,000 in this account, and only put in $200. So basically have no liquidation price. And then you will see your P&L, profit and loss. If it's red, obviously you lost money. And if it's green, obviously you made money. So you see here, you see the dollar amount, you see the percentage that you're up or down, and you see the estimated dollar amount of the fees as well. And then you have the daily realized P&L. So you will be able to see how much money you made or lost on the day on this account. This is very similar to all the other accounts that you can open. So whatever exchange account you open, trading leverage and trading perpetuals futures is like this. Now let me go lower here. What else we have here? Let me go lower here. Let's see. Executing a trade. I actually explained most of this now, but it's basically the way you execute the trade. You come up here, you go into, again, as I said, derivatives. You select what pair you want to trade or what token you want to trade. You can click, for example, Doge, or you can just search for it. You can select if you want limit order. The limit order is great because if you want, say, if Bitcoin goes to 100,000, I will short Bitcoin. So you can just simply go in. Let's go back to Bitcoin. Let me show you the example. If Bitcoin goes to 100,000, I can short it. I'll go in here. I will say, how much Bitcoin do I want to short? Let's say 50% of my account. I want to short it. Limit order, I can set 100,000. It will tell me what the balance will be, and then I can just simply open a short. I can confirm it, and as you see, it will place my short order up here on the chart, and it will show me that if and when price gets here, this order gets triggered, and this order gets put in, or I will actually short the market. Now, good part is if you can come down here on the bottom, you can see current orders. You can always just go and cancel that order, and by canceling, you can take out the order. It will disappear from the chart as well, so you can just put it anytime. If the market conditions changes, you can always change it. Now, one thing I didn't show you with trade execution is that you are able to set, there is TP/SL on all of the exchanges, and what this does is that it allows you to put in stop loss orders on limit. So let's say that I took a long position here, and I think that we don't go under this little low level here, which is $95,700. So if I believe it's not going to happen, I can just click here and I say, if we go below that level, my position will be invalidated, and then I would like to get out. So I'm gonna say 96. Hold on a second. What was it? 95,700. I go here and I write in stop loss 95,700. I'll confirm. And as I confirm, as you see, it says stop loss order, and it puts it down here. Now, the exact same way I see it here, it puts in what is my stop loss. I can put in a TP order. Let's say I'm assuming Bitcoin goes to 100,000. It will show me how much money I'm going to earn, how much money I'm going to make. And then I can just confirm, and it will put the little line on the chart as well, stating where I will have my TP, how much money I'm going to make. And down here, you will see what the TP order actually is. And this is it. I hope that you got a better understanding on what leverage trading is. Again, I have a complete tutorial on how leverage actually works, how you can manage your risk, how you can calculate your position size. Check out that. There will be a link in the description as well if we are not able to put it up there already. But check that out. That explains everything about leverage. Please do not get wrecked. But if you want to trade, I hope this was a great tutorial for you. And if it was, please let me know in the comment section. I truly appreciate your input. Let me know what else you want to see from me. Let me know what else I can help you with. And make sure to follow me on X. I drop you daily alpha, all the trades. And make sure to subscribe to the channel, smash the like, share it with your friends, and come back for the next one. I truly appreciate you, and I believe I'll see you in the next one. Take care.